All right, welcome back. Wednesday morning, we are working with decent global cues. What made the difference for us yesterday was largely domestic liquidity and supportive inflation data. So how should one read into yesterday's strong recovery? Is worst of the post-budget adjustment now behind us, and have bulls really regained their mojo? So to understand the current market technical market fundamental setup, I have with me Ajay Bodke, Head of Investment Strategy with Prabhudas Lilladher. Ajay, good morning and thank you for joining us. Ajay, just when it appeared that Indian markets were looking slightly rusty, last 60 minutes yesterday made all the difference. What did the trick for us?
Good morning, Nikunj, and thank you for having me. I think what clearly is evident is that the macro variables, I think, are suddenly turning supportive for India. I think we saw some of the key data variables coming over the last few weeks, be it the IIP number for May at 4.7%, where I think after nearly 15 quarters, the consumer durable numbers have turned positive at 3.2%, followed by a 4-month low WPI number that came in last week. And the CPI number, which presently surprised the market at 7.3%, which is the lowest since the new series has been started being computed from Jan 2012. So I think these are the issues that has been taken positively by the market. Also, I think globally, the fact that the crude prices, coal prices, iron and steel prices are clearly showing to be under control. And let's not forget that 75% of India's trade deficit is the oil and 12% of India's trade deficit is coal. So you're essentially looking at a substantial chunk of a trade deficit, the commodities contributing them on on a downward trend. And that is bringing cheer back to the market, in addition to the budget, which in my opinion, in view of the very tight fiscal space available to the finance minister, he has presented an admirable budget, especially with the drought looming in the wheat bowl as well as central parts of India, as well as only 7 regions out of 36 sub-meteorological divisions getting excess rainfall, and the rest either having scanty or deficit rainfall. So I think we have to keep a very close watch on a weekly basis about the sowing data and on the progress of the monsoons. But overall, I think we are, in my opinion, over the hump, and the market should consolidate the current level. And
markets should consolidate, according to Ajay. Ajay, let's address our big story. And a big story this Wednesday morning is that Reserve Bank of India has issued a circular on infra lending. What kind of material impact do you think this will have on banks?
Yeah, I think our banking analyst is extremely enthused with the norms that have come in. The fact that there will be no preemption of CRR, SLR as well as priority sector lending on long-term bonds, 7 years and above tenure, plain vanilla bonds, has in our interaction with the banking and financial services companies yesterday made us believe that this could be a game changer. A large number of projects that had been stalled because of want of finance and lack of enthusiasm on the part of many banks also to lend, I think could come back in the reckoning over the next couple of quarters as the banks start aggressively looking at raising funds, because their cost of funds would come down substantially. They'll pass it on to the project executors, and this whole virtuous cycle of reviving the moribund investment cycle will come back. We are concentrating on those banks that essentially have a large project finance exposure, namely Axis Bank and ICICI Bank would be our strong buys in the private sector, and in public sector, I think SBI and PNB would be our preferred picks. I think IDFC, I would like to dwell on for a minute. I think there was an expectation that IDFC's ROE could get savagely impacted by 4.5% because of conversion into banks. But the new norms, I analysts believe, clearly has given a great respite to IDFC, and the compression in ROE will simply be only 2% as per our calculations. And hence our IDFC offers an extremely strong entry point if one is taking a medium-term 1 to 2 year call.
Fair enough. Ajay, then what does one do in terms of the defensive play in the market, especially with the IT and pharma?
Yeah, I think in case of IT, we continue to like the front-end IT stocks. Because I think the global economy is on an up move. US especially is chugging along at a very good pace. Europe has come out of its problems. So the main markets that contribute to the IT revenues are on the mend. Pricing power is coming back in our interaction with the companies. We are given to believe margins should look up. and I think the pressures that the rupee was, a formidable pressure that rupee was expected to exert when people were expecting it to appreciate all the way to 55, I think that pressure is clearly behind us. So I think in our opinion, stock like Tech Mahindra, Infosys and Wipro in large cap space, offer, and KPIT Cummins in the mid cap space offer very good exposure. In KPIT Cummins in particular, we are expecting a growth of around 43% in earnings for the current financial year, followed by 22% in next financial year. The company has a strong ROE of around 24% and is trading at just 7.4 times FY16 earnings. Our analyst is estimating a one-year price target of around 230 rupees for KPIT Technologies.
Ajay, whereas the new RBI guidelines is good and constructive for banks and for some infra names like IDFC, are the new norms bad for NBFCs, because surely competition in the NBFC sector will intensify?
I think I'm looking at NBFCs from a different perspective. I'm looking at some of the NBFCs from the housing sector play perspective. I think those NBFCs that have a very strong mortgage book, I think the norms apply not only to the infrastructure sector, but they also apply, I think, to affordable housing sector. And that's where sort of, I believe that the banks which will be able to raise money at attractive rates would pass on sort of, to some of the NBFCs which rely on the banking sector for their funds, and they in turn sort of, can take advantage of these norms where there's no and the housing sector sort of could get a leg up. The affordable housing sector, as you are fully aware, all the houses in 6 metros which cost around 60 lakh rupees are eligible for a loan of 50 lakh rupees, and for the non-6 metros and houses up to 50 lakh rupees, the eligibility is around 40 lakh rupees of loan. So the affordable housing sector is what the government is focusing on, and in terms of the urban renewal also, this will play a very important part in terms of constructing 100 smart cities. So this all ties up extremely well in terms of the government's objectives of giving a leg up to affordable housing as well as infrastructure sector. So I think I would not be as negative on the NBFCs. Selectively, we can look at some of the NBFCs.
Okay, one more acquisition from Sun Pharma. They've acquired Pharmalucents Incorporation, and Pharmalucents Incorporation essentially is a US-based company which has presence in the injectable business. So after Ranbaxy, this is one more from Sun Pharma. Ajay, without getting into specifics of this acquisition, because hardly any details are out, what are your thoughts on Sun Pharma? An expensive stock, yet it continues to chug along.
I think whenever there post budget, I think when there was a scare in the market, I think typically people do gravitate towards some of the defenses. And in the Indian context, I think some of the leading pharma and FMCG companies were the ones where people sought refuge. And as a result of which, one saw sort of Sun Pharma doing well over that period. But our preference, our pharma analyst preference, clearly remains with Dr. Reddy's, and there I think he's expecting a growth of around 12% in earnings in next financial year, with an ROE of around 22 to 23% projected, and he's expecting a target price of around 3,023 rupees in the medium term for Dr. Reddy's. In the mid cap space, he's preferring on dips Aurobindo Pharma, although stock has done extremely well, and hence will advocate only getting there on dips.
Right. From the large caps, essentially, what would be your view on some of the cement names at this point, Ajay?
Yeah, I think the monsoons is typically the time when we see the construction activity coming to a kind of standstill in large parts of India, and hence the pricing power to that extent gets diluted in this period. But let's not forget that prior to the start of monsoons, I think all across the country we had seen prices going up between, say, around 10 rupees to as high as around 60-70 rupees in certain markets per bag, especially in southern markets. So I think in case of cement, I think as the economic momentum starts picking up, the sector is consolidated, pricing power sort of is back with the sector, utilization levels are low, and hence they would not have essentially a lot of capex is behind them. So I think it's a it's a great play on the operating leverage that will come into play as your volumes start going up, your capacity utilization start moving up, with no further capex being necessary for the next couple of years. Some of the leading players will be a prime beneficiaries of the upturn in the economy, and our analyst prefers ACC in the large cap space with a target price of 1562 in the medium term. He is expecting an earnings growth of 32% in the current financial year, followed by 34.5% in next financial year in ACC, and with an ROE of around 18.2% expected in the current financial year. The stock today is trading at around 16.7 times. In the mid cap space, our preference is with the Ramco Cement, and I have spoken about it on your channel for last few months. We continue to still like the stock, but only on dips. And there I think the play essentially, as I've been maintaining, is the growth in both Telangana and the Andhra, which has been lackluster for last 2-3 years because of Telangana agitation. New states being formed, new capital being constructed in Andhra part of the erstwhile Andhra Pradesh state, and overall southern markets being lackluster over last few years.
Right.
So Ramco Cement is what we like.
Sure.
In the mid cap space.
Sure. Thanks, Ajay, for that. In fact, let's go across to Sandeep Vagle now to get his ideas before market opens. Sandeep, what do you have for our viewers?
Tanvir, a buy in Orchid Chemicals, stop loss 78.30, target 90. A buy in a Tata Motors DVR, stop loss 306, target 324. A buy in Bharat Forge, stop loss 668, target 712. A buy in Exide Industries, stop loss 149, target 160. And a buy in Aditya Birla Novo, stop loss 1368, target 1475. Sandeep, thank you for those trading ideas. Well, it's raining, and it's raining cats and dogs in Mumbai, but what about rest of India? Monsoon update with Jatin Singh, founder of SkyMet. He will join us live right after this break.
FTIL is looking at a time frame finally of 10 days to ensure that they divest their 24% stake in MCX. MCX board will have enough powers to transfer this 24% into an escrow account, and there are indications that they are once again speaking to Kotak Consortium. As per the valuations go, there are indications that 725 to 750 rupees per share would be the valuations.
The story impacts the stock. The story moves the markets.
मुझे मॉर्निंग वॉक में रुकना बिल्कुल पसंद नहीं है।
जब ये नॉनस्टॉप चलते हैं ना, तो उनकी सांस भूल जाती है। पर ये मानेंगे थोड़ी।
ये बार बार रुक जाती है।
फिर मैं आइडिया लगाती हूँ, बीच बीच में रुक जाती हूँ। कभी फूल तोड़ने, कभी सनराइज देखने।
अरे कभी कभी कुत्तों के साथ खेलेगी। पर मैं झिक नहीं करता। इसे ये पसंद है ना। So, I am happy.
साथी सही हो तो किस्मत खुल जाती है और जिंदगी खिल जाती है। फेडरल बैंक, आपका परफेक्ट बैंकिंग पार्टनर।
सर 5-star होटल। होटल बुकिंग की चिक चिक करो बंद। गो आईबीबो का फ्री मोबाइल ऐप डाउनलोड करो। होटल लोकेशन एंड सिलेक्शन, लोएस्ट प्राइस गारंटी। डाउनलोड द फ्री गो आईबीबो मोबाइल ऐप और होटल बुकिंग।
Welcome back. Just to flag off a data point, the Chinese economy for the quarter gone by has managed to grow at a run rate of about 7.5%, and that surely is not cheering Chinese markets. Shanghai Composite is absolutely flat. Kospi is not going anywhere, but SGX is looking strong. So Indian markets, which have been the best performing market, well, looks like that outperformance is here to stay, because today SGX is moving independently of the global cues.
Let's get in a quick update on the monsoon situation in India. Like Nikunj pointed out, it's been pouring for a while in Mumbai, but Jatin Singh, founder CEO of SkyMet, joins in to give us an overall assessment of how the picture has changed since June was pretty much a drought month. Thanks very much, Jatin, for joining in. What's your sense? How closer are we to having an adequate monsoon season?
Oh, well, not at all close. I think the best case scenario we can think of in 2014 is a below normal monsoon. There's a 95% chance of a below normal monsoon. You see, if I just looked at the data today, you're still running at a -40. Apart from Bihar, southern parts of Andhra, everything is either yellow or red. It's quite below. You have parts of Gujarat which are running at -89%. So, you know, that's the way things are.
Jatin, but is it fair to look at the June data in isolation and get alarmed about it? Because monsoons are late, but monsoons could pick up in July.
No, I'm talking July data. You're already on the 15th of July. You need to understand that July is, see, out of the 890 millimeters, 285 millimeters come from July. This is your strongest month statistically. And you're running at a -40 with all the June deficit and part of the July deficit. Your oceans don't seem to be very active right now. You have a low pressure system that keeps on moving in from Head Bay into central India and now has gone slightly west. But as this rainfall is picked up, South India is going to go dry over the next 4 to 5 days. Rainfall over east and northeast is also going down. So that's kind of going to have a compensatory effect. We really have to see, you know, what the figures are by the 20th to 21st of June. But, you know, by that time, we'll be very clear which way we are going. Is it going to be below normal or are we heading towards very much a drought? And see, a lot of rainfall is based on perception. So I think because it is raining in Bombay, there's this perception that monsoon has arrived. Bombay is a coastal city. Part between Bombay, Konkan and Goa and Mangalore, it keeps on raining. This is your highest rainfall belt. You know, now from the northeast, it seems to be changing that this is that point. But if you look at the statistics across the country, things are actually quite bad.
And you don't expect it to pick up in August? I know you kind of put out some numbers there and some estimates, but do you think some...
No, we do. We think that August is the... We think that August is the best month of the 4 months. Okay, we've been saying this since April. Now, the encouraging, I might use the word encouraging with a pinch of caution, is the the Australian Bureau of Meteorology and the NCEP projections on El Nino, which are showing a cooling. But in terms of an evolving El Nino causing damage to the monsoon, I think that has already happened. What you could see, in which I think will pull this, which I think could, because I think there are you could also place your bets on a drought this time quite well, is the September rainfall, which is out there. But overall, I think your best case scenario, as I said, is a below normal, is a 2012. And your worst case scenario is a 2009. I think this monsoon is somewhere between a 2012 and a 2009.
60% probability of 2009 or 60% probability of 2012?
No, 60% probability of drought. Okay. 60% probability of drought, that's what we've said. 91% of LP in our last forecast on the 4th of July. 60% probability of drought. If it is going to be like 2009, we'll have to wait till the 1st of August, first week of August to figure that out. But if this is going to be a drought, I think in the last week of July, you'll get that picture.
But would it be a drought, an official drought scenario across, the key regions? We're talking about Northwest India, Southern Peninsula, as well as Northeast India, or do you think the coastal belt, you just talked about it, would perhaps be a different story?
Yeah. You see, in terms, so we've been saying this, actually we've been saying this since April. The most vulnerable part of this country to below normal or drought, which will have probably the maximum subdivisions which will be under drought, is northwest and west central India. So Rajasthan, Gujarat, Punjab, Haryana, western UP, Madhya Pradesh, parts of Maharashtra are the ones that are probably going to be most vulnerable in terms of how extreme things might be. We have maintained that Northeast and South India might be able to scrape through. But again, I'm iffy on South India because South India seems to be performing much worse than what we thought. Karnataka is overwhelmingly below. Kerala is below. Tamil Nadu, which is not supposed to get rainfall this time, is the only one that is in surplus. And parts of southern Andhra, even North Andhra, Telangana are doing quite badly.
Have you done some assessment?
So it could be a uniform, it could be.
Yeah,
go ahead.
My question is that have you done some assessment of what could be the impact of this year's monsoon on crops?
We are working on that because crop data is hard to gather. We do understand that sowing has been late and sowing has been patchy. but we will wait till the end of this month to get some concrete data on that.
Yatin, thanks very much for joining us and giving us that quick perspective. That's a quick monsoon update coming in there. The picture in Mumbai and the coastal area looks better, but that's not reflective of the kind of situation that is prevalent across India, especially central India and northern India. Let's just wrap it up. Ajay, given the monsoon risk, do you think the market could be in for a bit of a correction going forward? Could that be a trigger, or the market is pretty much priced in a weaker monsoon?
I would say that the market has clearly priced in a weaker monsoon, because the fact that we would have deficient rainfall in large parts of northwestern India as well as central India has sort of been internalized by the market over the last four quarters or so. Last 4 weeks or so. And I think although we need to keep a very close watch on a weekly basis, the sowing data also sort of needs to be very closely watched, because there I think the concern is mainly on the oilseeds and cereals, where the data is particularly worrisome. In oilseeds in particular, I think there has been an 83% drop as of last week in July vis-a-vis July last year. In terms of the area under sowing. Also, I think in case of pulses, there's a 48% drop in the total area under sowing. So these are the two crops that I will be particularly looking very close watch of, because they have a tendency of a higher of feeding into higher inflation. So pulses and oilseeds, I think we'll have to keep a very close watch. But overall, I think the market, in my opinion, has more or less absorbed it.
Okay. Ajay, always a pleasure to have you on ET Now. Thank you for joining us. A quick break on the show. Indian markets may have snapped their 5-day winning